come from a lot of different sources, and we need to be mindful that they're not all equal. I've kind of classified them in three different categories as a sustainable and efficient, ones that mostly come from operational, and then kind of the last resort and the highest cost. So, anytime you're talking about bringing money into your business and creating more cash flow, you just want to kind of analyze and what's going to be the best in your business and how to be sustainable. So, let's talk about those levers. The first one, increase profit. And to do this, this is going to be the most efficient and sustainable way in your business. If you can increase profit, then you will likely see cash flow to follow. And this isn't just increasing your top line revenue. This is really dialing in and looking both on cost and your prices to kind of reflect these things. So, raising prices is a really big thing, cutting unnecessary expenses, and just overall improving margins, maybe the efficiency in which you produce your product or service to help that bottom line, because profit is what turns revenue into cash. The second thing that you can do in order to create cash within your business is going to be decreasing accounts receivable. So, what does that actually mean? This means that the money, the revenue that you have created and are about to do, you want to create shorter payment terms, because unless in a lot of different companies, you create an invoice and maybe it doesn't get paid right away, but perhaps it gets paid in 10 days, 30 days, hopefully not 60 days, but just ensuring that you're looking at payment terms with all of your clients that you have. Perhaps making sure that all invoicing is actually completed, especially when you're talking in construction world of change orders, things like that. And then the one that kind of everyone hates, but really is a must, is if you have any unpaid invoices, you need to call and make sure that you're collecting it. Sales doesn't actually matter if the money isn't collected and you're getting that cash. Number three, decrease your inventory. So this is basically turning your stuff into cash that you already have purchased, but really monitoring and seeing where that inventory is. So is things that you've purchased in the past, are they kind of slow moving? Do you need to discount things, get it out? Maybe refine how you are ordering things. Maybe you're ordering too much of an item and they're sitting there in inventory too long. And just really doing an overhaul on your inventory, um, and seeing where that money can be drawn up. So inventory is only valuable when it moves. Oops. The second one is going to be selling other assets you have. So inventory is going to be a much quicker in and out for your business, but also looking at assets that you've purchased along the way. Maybe you have old equipment, old vehicles, tools that you're no longer using. Maybe you can get those on Craigslist or um, hopefully hopefully I didn't say my age there, but Craigslist or any other online platforms where you can potentially sell off those larger ticket items that you have on your balance sheet that maybe just aren't utilizing anymore and bring in some cash. So if it's not helping you make money, it's basically tying money up. Another way to create cash within your business is going to be increasing your accounts payable. So just like you're decreasing your accounts receivable, increasing accounts payable is basically pushing off those terms as much as you can. Instead of paying the vendor right away of your items, maybe you can work in that you pay them 15 days, 30 days. Maybe you can also do 60 days. Just kind of really looking at vendor terms and seeing, is there a potential of paying a little bit later, uh, not incurring any penalties or anything like that. Because basically, cash flow problems, they're usually a timing problem. The next thing you want to look at is adding debt. And this is where we're kind of creeping into your highest cost and last resort issues. Like I said, all cash isn't really created equal, but it can be a tool to use debt within your business. So, in order to receive this, you're going to look at loans, lines of credit, or credit cards. You do want to be mindful when you are pulling this debt that hopefully you are pulling this for items that are going to create income for you. So, purchasing equipment potentially that will increase that profitability. If you are starting to use debt as a source of covering payroll or covering regular expenses, that really is going to be unsustainable. And the last one is to bring in money into your business is going to be investments. And this one can be yourself. Potentially, you've been drawing on the business quite often, and now it's time to reinvest in it. Every year is going to be a little different, and there are some years that you're going to be able to pull from your business, and other years that you're going to have to, for a moment, put back in. And if you don't want to do that, maybe it's time to look at a partner or investor. But this kind of, like down below, it says cash from investments really comes with strings. So it may be part of your business that you're giving up in order to bring on this investment. So it's just something to consider. And if you're at that point where you are needing this, it can be a really good tool. So you want to ask yourself regularly, which cash levers am I pulling and where can I help that cash flow coming in? Is it solving a short-term issue or is it actually supporting long-term health? And where is the cash actually getting stuck? Again, are you pulling too much? Are you letting your clients pay later and but you have all your vendors knocking at your door wanting to get paid? Look at those time frames. And yeah, are you looking and relying on the last resort levers too often? Cash changes over time, and it's something that should be looked at and analyzed on a regular basis. Your bank balance isn't going to be the end all be all. There's a much larger picture within your business that it's really important to see those ebbs and flows and predict because we can do forecasting and cash flow analysis and really see what may happen within the future. And constantly tweak and change and make sure that we're updating with the current information to know when cash crisis is maybe coming instead of them knocking at the door tomorrow. Yeah, just regular check-ins prevent us from making reactive decisions. That's it that I have for today. So those were the 7 ways to bring in cash within your business. We are all accounting, Specca and myself. We would love to chat with you if you want some help deeper diving into your business and what you have going on. And yeah, we look forward to seeing you next Friday. I hope that you have a wonderful weekend and a wonderful week. And we will see you next time. Thanks.